The webinar today is all about building a market portfolio. And many of you are responsible for growth in one way or the other. And I wanted to pick up on this theme because we hear this all the time from our clients. They come to us and say something like this. We're a $500 million company and we want to be $1 billion company in 5 years or 2 years or 3 years, some variation of this. And clearly, when you see something like this, and what they often mean by this is they're going to have to grow outside their core. So there's a process that we've been putting in place that allows people and companies to achieve this objective in the most efficient manner because you're trying to get there effectively and you want to reach it, right? So there's two key things. You got to get there and you want to get there efficiently. You don't want to waste time and money. You don't want to have to invest in 20 markets so that one or two are successful, right? You'd like to invest in three or four and have three or four be successful. That would be the goal. So what we're trying to do again is to find these sources of revenue in core, adjacent, and new markets. And there is a logical order in which to do this. So the first one, of course, would be let's just grow from the core, right? You're already in a bunch of markets. Why not grow the market that you're already in? That's the path of least resistance, right? You don't have to enter a new market. You have everything already in place. So, trying to figure out how to grow in that core would make great sense. The second thing would be to look for what we often call adjacent markets. And we'll get into that in detail here. And of course, then to get into new markets. So again, you're trying to grow from the core. If you can't hit your number, you have to enter some adjacent markets. If that doesn't help you hit your number, you have to get into some new markets. And I think most companies like to avoid going after new markets if they could, because those are the most risky investments. So let's look at this in a natural order. And when we start studying this, there is one big obstacle to success. We're focused on core markets, adjacent markets, and new markets. But one of the obstacles is there isn't agreement in most organizations as to how to best define a market. I find this rather remarkable, but you can ask yourself, how does your company define a market? We've heard things like personas and use cases and geographies, territories, portfolios, demographics, technology around a product, and so on, which means there's really a lot of inconsistency in the way markets are defined. So we've seen this. It's rampant in most organizations. This market definition process is really random. It doesn't take place in many cases. It's just left to chance. People can define the markets whatever way they feel comfortable and whatever way the organization is used to doing it. But of course, there's issues with this, right? We see in the lean startup movement, for example, that there isn't even a market definition step in the process. And what they suggest you do is hypothesize the market, the product, the customer's needs all up front, and then go do your customer discovery work and try to find that product market fit. But you're trying to find product market fit before you even define the market. So it becomes this recursive process that you get stuck in. And this is why in so many situations, there's product iteration, there's pivoting, there's churn, there's failure. It's a very inefficient pathway forward if we can't agree on what a market is. If we can't agree on what a market is, how can we agree on what markets to pursue? How can we agree on what markets we're in? How could we agree on what an adjacent market is and what a new market is? Right? So we have to get our definition in place, and then you'll see how it simplifies the path moving forward and figuring out these three distinct paths to growth. So what is the best way to define a market? Well, when we look at this, we can sit back and say, well, a market should be defined in a way that provides a consistent basis for evaluation, meaning everyone defines it the same way. And we can define all markets using the same approach, right? So that when it comes to saying, do you want to go after this adjacent market or that one, we're not comparing apples and oranges. We need the market to be inclusive of everybody in the market. So we have to describe it in some way that includes everybody that is in it. Next, it has to be stable over time. We want to pick a valid, stable focal point that can be viewed as a North Star for value creation for years to come. So we want to define our market in a way that is stable, not something that can go away when technology goes away. We also want to make sure it doesn't assume a product or a solution. It's solution independent. And this goes hand in hand with it being stable over time. If you tie your market definition to a product, when that product goes away, then your market goes away, which uh, can be quite painful, of course, right? But we're going to find something a bit more enduring than that. We also want to make sure it makes each market unique. So they're distinguishable, they're unambiguous, they can be compared against each other. They offer a framework to discover markets that are adjacent to those that you're currently serving and make it easier to understand customer needs. This would all be ideal, right, if we could define a market in this way. So let's do that. So jobs to be done theory, as you know, is pretty basic and its fundamental notion that people buy products and services to get jobs done. And as you also know, if we make job the unit of analysis, the world looks a bit different. So instead of defining markets around a product or technology or territory or geography and so on, we can define the market around the job to be done. So let's head down that path and see what happens. If we define the market around the product, you can see that market would disappear as technology disappears, but there is an underlying market that doesn't go away. And that's associated with the job the customer's trying to get done. So you can see here, people have been listening to music forever, and you see different technologies that have come along even in the past, my generation. And you've seen this evolution from something a bit archaic to something far more effective. The job's getting done better, same job. So let's define a market in this way: a group of people and a job to be done. So it could be parents who are trying to pass on life lessons to children. It's a group of people and the job they're trying to get done. And you notice how we structure this job statement. The job begins with a verb, there's an object of the verb, and a contextual clarifier. And the reason we're doing this is we want to define all the markets and all the jobs exactly in the same format. So we're not creating inefficiency in the way we're defining a market. So again, we're saying a market's a group of people and the job to be done. And the way we define this is the group of people, parents, and we define the job as a statement that includes a verb, an object of the verb, and a contextual clarifier. So all these are examples of markets. Interventional cardiologist, for example, trying to restore blood flow in an artery. It's a group of people trying to get a job done. We have cybersecurity managers trying to protect a website from cyber threats. Again, a group of people and the job they're trying to get done. All these jobs are being stated in this very consistent, similar format. Automotive engineers trying to distribute engine power in a vehicle. So with that in mind, let's ask the question, what markets are you currently serving? So we want to define your markets through this lens, right? So here's what's interesting. Whether you are already in a market or you have an idea for a product, you've already picked a market, right? You're in a market. Now, what we would want to help you do is to define what that market is through a jobs to be done lens. So even if you're a startup or an entrepreneur with an idea, what we would suggest you do is to step back from the idea and say, okay, given that that's my product idea, what market am I in, right? What market am I trying to serve? And then you'll see how we can go forward and make discovery of growth opportunities much more efficient. So let's do that. All right. So what we want to do here is come up with a way to get you to define a market through a different lens. Instead of the lens of the drill maker, define the market through the lens of the hole maker. So again, we're trying to get you to move away from a product mindset to a jobs to be done mindset in the way we define the market. So we created a tool to do exactly that. We introduced this last November, and in fact, Steve Blank put it out on a blog post on his site as well, and talked about the problem and where Lean Startup doesn't have a market definition phase, and suggests that this be bolted onto the front end of the process. So let's talk a little bit about how this works. We want to start where you start. So we're going to start by defining a market around the product. So we start up here with number one. What's the product or service idea that you want to innovate? And from there, we ask the question, well, who could use the product to get a job done? Who are these job executors? And you might want to list all the different types of people. And I'll show an example here in a second. All the types of people that might try to get that, try to use the product. And then we want to abstract that definition up to a higher level and call that group of people the job executor, like parents trying to pass on life lessons to children, for example. So parents includes male, female, all ages, right? It's everybody. It's inclusive of everyone in that category. Then on the other side of the equation, we want to take that product and ask the question, what job does the product get done? So this is the function of the product. Now, we've also learned that most products only get part of a job done, and customers cobble together solutions to get the entire job done. So we want to ask them, in conjunction with the product that that you've got in your mind, what other products do they use and what are their functions? What jobs do they get done? And what we do from that is to work with customers to figure out what is their job that they are trying to get done. How do they describe their job? And that goes in block number 8 here. So let me give you an example. So I'm going to go to our Bosch circular saw example that I've used in the past, where we worked with Bosch to help them enter the North American circular saw market. And we start with the products. So they want to create a circular saw. Well, what market is that? Is that circular saw market? Well, that's the product view of it, but we're going to flip it around to be a jobs to be done definition. So the first question we ask is, who's going to use the product? So we've got a whole group of people. We have roofers, we have framers, finished carpenters, electricians, plumbers, general contractors. All these people are using circular saws for some reason. So then we ask the question, is there a way we can elevate what we call this group of people? Just like parents trying to pass on life lessons to children. You don't want to say male, female, this age group, that age group. Is there a higher level category, right? And here we looked at trade workers, tradesmen, tradespeople, all different variations of that, and concluded that tradespeople is a good term to use as all inclusive of everybody who's potentially using the product. Then we go to the other side of the equation and we ask the question, well, what job does the product get done? Well, a number of things. It cuts plywood, it cuts 2x4s, it cuts lumber. That's what people are using it for. And then we ask the question, what other products do you use in conjunction with the circular saw? Well, we use a pencil to mark the cut path. We use a T-square to make sure the cut is straight. We use a measuring tape to help plan out the cut. We use sandpaper to remove the burrs from the edges. So there's a number of products that are used in conjunction. And then we ask the question, well, what are you ultimately trying to achieve? Well, they're trying to cut wood along a path or cut wood in a straight line. So there we have it. What we have, we're not in the circular saw market. We're in the market to help tradespeople cut a piece of wood in a straight line. Currently, they're hiring a circular saw to do that, but doesn't mean that that's the ultimate solution. We want to understand that job at a level of detail that allows us to innovate past the circular saw, right? So with that in mind, we can see how the market emerges as a group of people and the job that they're trying to get done. The point I wanted to make here too, you notice if we define a market in that fashion, the way we've defined that cuts across verticals, it cuts across personas, it cuts across many traditional methods for defining markets. It's more inclusive. And when you're defining your market up front, you don't want to segment it unnecessarily. You want to include everybody in the market that could be in the market. You can segment the market later on in the process, but you don't want to do that up front. So how can you find growth opportunities in your core markets, right? So if you're responsible for growing from the core, how do you get there? Well, there's really a couple different ways. You can get more of the job done, or you can get the job done better. So I'll describe both of those scenarios. In terms of getting more of the job done, let's go back to our job mapping techniques. This comes from an article we produced in HBR back in 2008, where it talks about all the steps in the job. And the goal of the job map is to break it down into its component parts and lay out what are people trying to do as they go from the beginning to the end of the job. Again, this is not a process map. It's not a customer journey map. We're not laying out what people are doing. This is not in solution space. It's in problem space. So we're laying out what are they trying to do, independent of the solutions that they're using. And what we can look at here are we can look for areas of the job that people struggle to get done. And you can go in one or two directions. So some of the first questions we want to ask here once we've created the job map is, do our products get the entire job done or only parts of the job done? What holes exist in the portfolio? Are people cobbling together solutions to get more of the job done and so on? And competitors, you can ask the same questions about their products. What non-traditional competitors exist? Maybe you're in the execute step and they're in the monitor step, but you're in the same market getting different parts of a job done. And you want to know this because those non-traditional competitors can disrupt you in a way that you won't see. We can also see from a process standpoint, are we forcing customers to execute the job in a suboptimal order? And we often see this where there's steps in the job missing. There may be a confirmation step that's not there that's causing a lot of issue once you execute the job. Then, of course, from a marketing standpoint, too, you can make some immediate considerations. If your product is getting the job done better than some competing solutions, you can advance your content, advance your marketing by touting the differentiation points in an effective way. The other way to do this is to help customers get a job done better. Instead of getting more of the job done, let's pick a step in the job, maybe the step we're already serving, and get it done even better, get it done perfectly. So to do that, you'd want to understand all the needs or the outcomes associated with the step in the job that you're currently serving. I wanted to show some examples of this, and I've done this in other presentations, but this gives you a general idea of all the detailed outcomes that might exist in a step of a job. So if we look at step number 2 here, the job is surgeons who are trying to remove an anatomical structure surgically. The step number 2 is to gain visual access to the structure. Again, it doesn't say how, it's just what they're trying to do. And then how do they measure success along the way? They want to get the job done faster, more predictably, higher output throughput. What are they trying to achieve? What are they trying to avoid? And these statements get at all these key issues. They want to minimize the time it takes to mobilize structures bound by adhesions that block access to the structure. Or number 9, minimize the likelihood of damaging structures when separating them from adhesions. And you can read through these. This gives you a sense of what outcomes are all about, and you can learn more about how to define and capture outcomes in some of the other work that we've done. It's all part of what we call the outcome-driven innovation process, where we are going to create more value for customers. And we start by defining a market as a group of people in the job to be done, right? Not around a technology or a product. And then we define needs as those measurable outcomes. And then we uncover the most underserved needs through quantitative research. And then we segment the market into smaller pieces, groups of people that have different unmet needs, even though they're all trying to get the same job done. Right? And from that, you can start building out your strategy to grow your core market. And that's really the formula to success in growing from the core. I added the slide in here too. I find this interesting. This is why I like thinking about core market growth. What you're trying to do is to get on the most efficient path to growth. In other words, you want to find the fewest number of outcomes that, if addressed, would have the greatest positive impact on the largest number of customers. So another way to say that is you want to find a need that's highly underserved across 100% of the population. That would be ideal. And we call those high leverage opportunities, right? Outcomes that are unmet across 100% of the population. We completed one study just this past week. There were 94 outcomes. There was only one high leverage opportunity cut across 100% of the population, but it's still a great focal point for innovation and to differentiate, because you can just do one thing that's going to have a positive impact on everybody that is in the marketplace. And then you can move down from there. Maybe there's other segments where that share a common unmet outcome. And then there might be other outcomes that are just unique to a market segment. But plotting this out in this order and figuring this out will help you get that most efficient path to growth, so you can figure out how to grow the core before you start moving on to the adjacent markets and the new markets. All right. Well, having done that successfully, let's talk about the second path to growth then, which is to uncover and prioritize the adjacent markets. Now, I've always found this pretty interesting. You've heard that term adjacent markets for a long time, but how are they defined is the key. And so this question came up at in a recent event. How do you identify promising related markets that leverage the core to create competitive advantage and ideally a flywheel effect? Well, how do you do that? So in order to do this, we have to define a market through a jobs per done lens. We have to know what a market is. So for example, if you define a market as a vertical, what's an adjacent market? Is it another vertical? If you define a market as a technology or a product, well, what's an adjacent market? Is it another technology or another product? And we could go on and on, right? It's got to be adjacent to something. So the way you define your market, it has to be adjacent to that market, right? So let's lay this out for you so it makes sense. When we think about our core market, we have a current job executor getting a current job done, right? It's a group of people getting a job done. That's the exercise we just went through. So you can do this for all your markets and figure out what markets you serve. And what this allows you to do is to figure out, well, what are the adjacencies? Now we're going to define two different adjacencies, one up in this direction here, where it's the same job executor, that's the adjacency, and it's a new job that they're trying to get done. So same group of people, but a different job. Now, the beauty of this is you already have made headway with that group of people. You market to them, you talk to them, they know your products. So there is some competitive advantage built into that decision, right, to go in that direction. So this could be, parents passing on life lessons to children. Well, what else do parents want to do? They want to prepare their children for college. They want to ensure they lead a healthy lifestyle. Those are other jobs that they may want to help them get done. Going in the other direction, we can say that another way to be adjacent is to take the current job and find new executors for that job. So we have parents trying to pass on life lessons to children. Ask the question, who else is trying to pass on life lessons to children? Well, it could be grandparents, it could be teachers, it could be coaches. There's a much wider group of people that are trying to pass on life lessons to children, which allows you to expand your market along this adjacent dimension. And then, of course, we have the upper right, new markets. These are much more risky because there is no competitive advantage for you because you're not serving the executor and you don't have the technology to get the job done, right? So you can see why these are laden with more risk. So the natural path to growth then is to go after these adjacencies in the directions that make sense and build from the core in that direction. So how do you assess the attractiveness of these markets? Well, we recently did some work for a medical device company who had a technology in mind, and they thought this would help them enter this adjacent market. So what they wanted to know was what steps in the job exist, and are any of those steps underserved, and does our technology address those underserved steps? So this is the path they went down to figure out, is this worth going? So by talking to a few customers, they created their job map, and they quantified this with about 180 surveys. And they asked people, how important is it that you are able to get this job step done? And then how satisfied are you with your ability to execute this step in the job? And again, there's only a dozen or so steps in the job, so it's a pretty quick and dirty survey. And when the results come back, of course, you can figure out where the opportunities are. So here you can determine, are there parts of the job that are underserved, and then make the assessment. Does my technology help me better prepare or confirm or execute the core job that the customers are trying to get done? What they found out in their case is that it did address about a half dozen of the underserved job steps that exist in the marketplace, which helped them make a quick decision to attempt to enter into the market. So this is a great way to think about growing and making decisions to grow in adjacent markets. And then we have the new markets. So new markets are in that upper right quadrant. Again, the way we cover this, we have the core. We grow from the core into the adjacencies. What makes them adjacent is because they have a shared job executor or a shared job, right? They're adjacent to the core. Right? And then, of course, we have new. So let's talk about new markets. These are more risky, of course, but when we define new markets, we have to define them all in the same way. We've done a number of studies in the past where companies come to us and say, hey, we have a dozen different markets we're thinking about entering. Can you help us prioritize them? Well, the first thing we have to do is to define those markets in the same way. And often they're defined as technologies or verticals or products. It's like apples and oranges. They can't be compared. So we got to get everything on an even keel, if you will. So with the definition we talked about, the group of people and the job to be done, we can put them all in the same categories, if you will, and then begin the analysis on them. So this is how it generally works. We pick out a job executor and then go to that job executor and ask them, what are all the jobs you're trying to get done? P&G came to us, for example, and asked us, what are all the jobs that parents are trying to get done? Parents of children that ages 0, roughly infants to 2 years old. So there's a whole series of jobs that they're trying to get done. And then they want to pick from those to see which of them they may want to address with a new product or service. So how do we go about identifying those most attractive markets? Well, again, through research, we can put a survey together and have our list of 40, 50, 60 job statements that we've collected and ask parents to tell us, how important is it to you that you're able to pass on life lessons to children or whatever the statements might be. But they're all defined in the exact same way. So we can compare apples to apples. We're not introducing variability into the process. And we can pick new markets that we might want to enter. So there are 42 different criteria that we've created over the years that we use to help companies decide which markets they want to get into. And you can actually download this market selection tool from the Strategy and Resource Center on our website. But at a very high level, it's helping you pick out the most attractive market from a financial standpoint, from a risk assessment standpoint, from a capability standpoint, and so on. But some of the evaluation criteria, they're from a jobs perspective, of course, right? But think of it like this. Would you rather be in a market or enter a market that has 3,000 job executors or 300,000 job executors? Would you rather serve a market that's underserved or overserved? Would you rather enter a market that has a high rate of growth or job executors or a declining rate of growth of executors? Would you prefer to be in a market that is the job is getting done 5 times a day or 5 times a year? Right? What percent of the customers are underserved? Are people willing to pay more to get the job done better? And so on. So you can see from this framework here, you can start narrowing down and filtering out the less attractive markets and figure out the one that is most closely aligned with your current strategy and goals. So with that, this is the process, right? We just went through it. 3 steps. We grow from the core, and we can either get the job done better or get more of the job done. Then we can pick the adjacent markets, and we can do them more effectively because they're adjacent to our core. We know they are, so we're building in a competitive advantage because we know we have a competitive or we have the capabilities to be in that market. We have the right to play in that market. And then lastly, go after the tougher ones, but be careful in your market selection, because if you're trying to go from $500 million to $1 billion in growth, chances are that you're going to have to enter one or two new markets, and you want to select them very carefully. So finding sources of revenue growth is simplified when looking through a jobs to be done lens. And that was really the lesson for today. By looking at markets, defining markets all in the same way, it helps us figure out how to grow our core, our adjacent, and new markets. So if you want to engage with Strategy, we can help you build an innovation capability, formulate a product strategy, discover hidden growth opportunities, feel free to contact us at info@strategian.com. Thanks everyone for joining us. I really appreciate it.